Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 11th of December. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Bloomberg reports the United States has seized a sanctioned oil tanker off the coast of Venezuela in a sharp escalation against President Nicolas Maduro.
The US Federal Reserve cuts interest rates, but what emerges is a divided Fed and so-called silent dissenters.
And why Poland's coal mining industry is disappearing more quickly than expected and what it means for Europe's holdout.
Let's start with a roundup of our top stories.
The United States has seized a sanctioned oil tanker off the coast of Venezuela in a sharp escalation of tensions between the countries. Bloomberg was first to report the move, which was later confirmed by President Donald Trump.
As you probably know, we've just seized a tanker on the coast of Venezuela, a large tanker, very large. Largest one ever seized, actually. And other things are happening.
The US president has been increasing military pressure on Venezuela in recent weeks, conducting more than 20 strikes against alleged drug trafficking vessels and threatening strikes on its territory. Venezuela called the seizure a blatant theft and an act of piracy. The US action may make it harder for the country to export its crude oil, most of which goes to China.
Ukraine has sent a revised peace plan to Washington as President Trump held a call with the leaders of France, Germany and the UK. The European leaders described the negotiations as being at a critical moment. Speaking in Kyiv, President Zelensky says the world, including the Kremlin's allies, can force Russia to end the war.
Today, I also received a report from the head of Ukraine's Foreign Intelligence Service, including on the enemy's economic situation and Russia's growing dependence on China. Throughout Russian history, no one has ever surrendered sovereignty so much to China or any other major power, and it is astonishing how much Russian President Vladimir Putin is paying just to avoid ending this war.
President Zelensky speaking there via a translator following weeks of talks that have produced a document more palatable to Kyiv than the initial 28-point plan from the US, which proposed major concessions from Ukraine. However, several sticking points remain over territory and security guarantees. It's also not clear if Russian President Vladimir Putin is willing to agree to a deal to end the fighting.
Jerome Powell talked up the US economy's resilience as the Federal Reserve cut interest rates, but policymakers are increasingly split on the path ahead. Rate setters voted 9-3 for a quarter-point cut, taking the base rate to a range of 3.5 to 3.75%. Fed Chair Jerome Powell says it was a close call.
In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate.
The Fed chair is trying to balance persistently high inflation with a sluggish threat to unemployment. The result marks the first time since 2019 that three officials voted against a policy decision with dissents on both ends of the policy spectrum. Investors reeled in their expectations for rate cuts next year to just 2.
Oracle shares fell more than 10% in extended trading after reporting a jump in spending on AI data centers and other equipment. It's a sign that rising expenses are taking longer to translate into cloud revenue that investors would like. Oracle's major cloud customers include OpenAI, ByteDance and Meta. Cloud sales increased to $7.98 billion in the second quarter, while revenue in the company's closely watched infrastructure business gained 68% to $4.08 billion. Both numbers, though, fell short of analysts' estimates.
And estate agents have warned that London is experiencing the most widespread decline in house prices in the UK. The Royal Institution of Chartered Surveyors said its gauge of London property values dropped to its lowest in more than 2 years. Bloomberg's Freddie Fulston has more.
London is bearing the brunt of Labour's new tax on high-value homes. The so-called mansion tax disproportionately affects the capital, which is home to nearly 60% of all properties over £2 million. It's delivered a fresh blow to a market already under pressure from stamp duty hikes and the departure of wealthy foreigners. However, activity could pick up further down the line. The surveyor's indicator for sales over the next 12 months improved in November, posting its best reading since May. In London, Freddie Fulston, Bloomberg Radio.
And those are our top stories for you this morning. Now, after the US Federal Reserve rate cut this morning, you've got 10-year US Treasury yields down 2.5 basis points at 4.12%. But we do have stock futures deeply in the red. Nasdaq futures dropping more than 1% today after the drop in Oracle's share price. S&P 500 E-minis also weaker, along with European stock futures this morning. Looking at Asia, the MSCI Asia Pacific Index down by 0.6%. You have declines for oil prices. Brent crude down 0.4 this morning, $61.98, and Bitcoin retreating down 2.3% this morning. Gold is also dropping 0.5% right now, as the Bloomberg Dollar Spot Index is a touch firmer this hour. Those are the markets.
In a moment, more on the escalation between the US and Venezuela. Plus, we'll have analysis of the Fed decision and bring you a story on how Poland's coal industry is adapting to the green energy transition. But another story we've been reading this morning: if you didn't think that Guinness fever could get any bigger, Diageo's now opening a new Guinness-themed attraction in London to cash in on the surge of popularity the stout has seen. So it's a new site in Covent Garden, going to feature a microbrewery, restaurants, a gift shop and bars, of course. It's now going to be adding to the global now range of Guinness-themed tourist attractions. Of course, St James's Gate in Dublin, the Guinness Storehouse, and where Guinness is brewed, but also microbreweries they have in Baltimore and Chicago. They won't be actually brewing Guinness in London. They'll just be selling it. They'll be brewing other kinds of beer.
It's absolutely enormous, apparently, this space. I haven't seen it yet, but no doubt I will on my various travels around London. Massive space. And I guess also maybe after the House of Guinness, the Netflix series, maybe they have got new, younger fans, perhaps. They've also got an alcohol-free beer that apparently is super popular. Yes,
I am told by Guinness connoisseurs that it's very good.
Oh, really?
The alcohol-free version. I just feel like this is going to add to the debate that all Irish people abroad have about how terrible Guinness is outside of Ireland, and that you can only have decent pints of Guinness in Ireland. I was literally having this conversation with some Irish people last night here in Brussels as well. So, I mean, this is a conversation that I feel will never die. It is only going to be fuelled by the opening of the new Diageo microbrewery in London. That's one of the stories we've been reading this morning.
Now, let's get to our top stories this morning. US forces seized a sanctioned oil tanker off the coast of Venezuela. This is a major escalation of tensions between the Trump White House and the regime of President Nicolás Maduro. Venezuela has called it an act of piracy. Joining us now is our Washington, D.C. editor, John Harney. John, good to speak to you. We know the Pentagon's conducted some 20 strikes on alleged drug trafficking vehicles. Why seize this oil tanker?
The reason given was that this is a sanctioned vessel, and Attorney General Pam Bondi said that there was, in fact, a warrant for the tanker, and that it was transporting sanctioned oil to various countries. And included in her post was a video, a very dramatic, cinematic video, U.S. forces descending by rope to the deck of the ship as they seized it.
What have we heard in terms of a response from Venezuela to this news?
Well, it was a combative response, calling the seizure of the ship an act of piracy, and again accusing the United States of engaging in this campaign, this aggressive campaign against the Maduro government of Venezuela, simply because they wanted to seize the country's vast stores of oil. This is has been a recurring theme of the Maduro government since relations with the United States deteriorated some years ago.
I suppose there's also a question about whether this is a return to regime change by the US in Latin America. That, I suppose, is the underlying question.
Well, of course, there's a long history of the United States exerting influence and often, well, sometimes unwanted influence in Latin America. This, of course, began with the Monroe Doctrine of the 19th century, which was intended to keep out European powers. But in the case of Venezuela, President Donald Trump has been intent on removing Nicolas Maduro since his first administration. But with these strikes on alleged drug boats, and now the seizure of the tanker, this confrontation continues to escalate. At the same time, of course, you have the United States has assembled a very large military presence in the Caribbean, which includes the world's largest aircraft carrier, the Gerald R. Ford.
Yeah, so plenty, to watch in terms of the developments on this as well. John Harney, for now, our Washington DC editor, thank you very much for bringing us up to date with the news around that sanctioned oil tanker being seized. We did see a slight uptick in oil prices after that news, although we are seeing them lower now on the day, down around 0.5% for Brent crude.
Stay with us. More from Bloomberg Daybreak Europe coming up after this. Well, let's also talk about the Federal Reserve decision yesterday and the divisions that it seemed to highlight among the rate setters. Our Markets Live strategist Mark Cranfield joins us now for more on this topic. How significant then were the divisions in this decision to cut by 25 basis points? Mark, we've been talking about silent dissenters.
Yeah, it's pretty unusual. There's been a few comments today on Bloomberg about how it's rare to get a three-way split in the Federal Reserve. And obviously, that's partly why traders are not really taking a clear view on when the next move is going to be. So the next meeting is in January. It's 6 weeks away. And quite often you would get, particularly after you've had a fresh dot plot, as we had last night, which is still signalling lower rates for next year. Normally traders would start pricing in another interest rate cut fairly early, but that's not the case yet. And clearly, over the next few weeks, there is going to be a lot of back and forth between voices inside and outside the Federal Reserve as to what is the correct move from here. And you've got something for everybody. You can see in the statement and the press conference yesterday that there's a full range here. There are some people who are concerned about inflation. There's some concerned about the jobs market. And it really is very hard to pin down where the Federal Reserve will go next.
Well, I suppose when we're thinking about all the changes that are going to come for the Fed next year, of course, a new chair, we don't yet know who that is. The assumption is that it's going to be Kevin Hassett based on the comments we've had from Donald Trump so far. It's not going to be any easier for the next Fed chair, it seems, to be able to perhaps rally a single opinion or at least a consensus opinion on what to do about interest rates.
That's certainly true, but it also goes beyond the next chairman. You can see that the current White House administration has started to change the personnel even outside of the chairman. There will be a few more spaces up for grabs next year. And it looks as though they're methodically trying to alter the balance of power within the Federal Reserve every time there's an opportunity to replace somebody. There's even a suggestion that might not carry much water, but they're even trying to talk about the fact that you need to live within a certain district for 3 years before you're allowed to become a Fed governor. So there's a number of issues which are trying to alter the way in which the bias is seen within the Federal Reserve. And investors obviously have to get their heads around it. They need to take that into account. It's not just about what data is coming out. It's also about the personalities on how they would interpret the data and the messages they're getting from the White House.
Yeah. Meanwhile, there's also one more technical issue that the Fed's authorising new purchases of short-term Treasury securities, and there is a market sort of reaction or interpretation of that too.
That's the most, from the market's point of view, that was the most significant development last night, because that is a pure injection of liquidity. It's almost a kind of mini quantitative easing. Markets have been used to quantitative tightening for the past few years, and this is a complete shift. It's throwing money back into the market. Jerome Powell also said that this would likely stay on the high side, so they may even increase that number. So it's going to throw money straight back into the short-term money markets. Stock markets liked it very much. They were knocked back a bit today by Oracle, but that will probably pass once American markets get going again later today. They're obviously slightly concerned about short-term squeeze over the year end, but it goes way beyond that. It's making sure that there is sufficient liquidity going right into next year. And that's a very positive development for markets, particularly in the United States.
Okay. Mark, thank you so much for being with us, taking us through the reaction to the Federal Reserve rate decision. That's Bloomberg's Markets Live strategist, Mark Cranfield.
To Poland next, which is speeding up its transition to clean energy, and that means pain for the country's coal industry as traditions run deep throughout the nation. Our reporter Maciej Martowicz joins us from Warsaw for more on this story. Maciej, good morning. How important, first of all, is the coal industry in Poland?
It is, I would say at this point, it's still very crucial. It still supplies Poland with a key component for energy generation. It accounts for more than 50% of electricity generation, and it also is a key fuel for heating for industry and for households as well. So at this point, it's irreplaceable, but it is changing, and this is what the story is about.
Yeah, the transition, the change. I mean, you've rooted the story very interestingly in the communities that dig out this coal, but also that the country is adapting to the green energy transition.
Yeah, I went to the south of Poland, to Katowice, which is like the main city there in the Upper Silesia region. I went to this historic district of Nikiszowiec there, spoke to miners, observed the celebrations, because I went there on December the 4th, which is a traditional celebration day, the miners' day, let's say. It's called Barburka in Poland. And yeah, people there, they already agree with the view that the coal is ending, and they know that the industry is shutting down slowly. It'll be over in 10 years. Because Poland is investing heavily in other energy sources. It's investing in gas-fired power plants, it's investing in renewables, in solar plants, in wind turbines. It's going to have its first offshore wind next year, and in 10 years, it's going to have its first nuclear plant. So the whole landscape of energy production will change in 10, 15 years.
From the people that you spoke to, what are they hoping that will happen to their jobs, or do they have aspirations to be able to transition into some of these other areas which are growing?
Some, yes, but there's not enough. I would say it's not that easy to transition, especially that those other industries will be elsewhere, that they would have to move. I think the government is preparing some kind of a cushion for them so that they can live from government subsidies for some time, and then they can retire, because most of the miners there are already close to the retirement age. The hiring ended some time ago, and the mines, even though there are more than 10 of them operating in the Silesia region, they are close to ending their operations.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.